In 2024, BRICS introduced BRICS Pay, a blockchain-powered payment system intended to simplify cross-border transactions among its member nations. This initiative reflects a shift in global finance, as BRICS seeks to reduce its reliance on Western-dominated financial systems, particularly the US dollar. BRICS Pay was first demonstrated during the BRICS Business Forum in Moscow, where attendees used demo cards preloaded with rubles to make purchases. While these initial transactions were symbolic, they signaled the BRICS nations' interest in creating a financial system less dependent on the US dollar. The goal extends beyond convenience. It addresses the desire for financial independence among these emerging markets, which collectively represent over 40% of the world's population and a significant share of global GDP. BRICS Pay has been a long-term project. For years, BRICS nations have expressed concerns about a global financial architecture they perceive as favoring the West. Institutions like the International Monetary Fund, the World Bank, and payment systems such as SWIFT have been viewed by some BRICS members as heavily influenced by Western interests. BRICS Pay is a result of ongoing discussions and cooperation among the nations, aiming to create a system that better reflects their needs. The US dollar has long held a dominant position in international markets. Since the end of World War II, it has served as the primary global reserve currency, facilitating the majority of international trade and finance. This dominance has enabled the US to use its currency as a tool of influence in the global economy. However, some countries see this reliance on the dollar as a potential vulnerability, particularly in light of US geopolitical strategies. BRICS Pay emerges as a response to this dynamic. By developing an independent financial system, BRICS nations aim to reduce their exposure to external economic pressures, including sanctions, and gain more control over their trade and financial transactions. The platform's blockchain foundation is designed to offer a degree of protection from outside interference, promoting greater autonomy in financial exchanges. The US dollar's role as a global reserve currency is seen as providing advantages globally. The US dollar is viewed as one of the most stable and liquid currencies in the world, and serves as the primary reserve currency held by central banks globally. In times of economic uncertainty or financial crises, investors and countries often turn to the dollar as a safe haven asset, helping to stabilize the global financial system. Approximately 60% of global foreign exchange reserves are held in US dollars. This allows countries to hold dollar-denominated assets, such as US Treasury bonds, which are considered safe and liquid. The consistency of the US financial system, including robust legal frameworks and monetary policy, contributes to trust in the dollar. As such, the dollar sets many of the global financial standards in banking and payments. Whether BRICS Pay can significantly alter the financial landscape will depend on its ability to achieve widespread adoption and establish advantages over the dollar. At the core of BRICS Pay is blockchain technology, which offers a secure and transparent means of recording transactions without intermediaries. This decentralized approach ensures that no single country or institution has control over the system. For BRICS nations, many of which have faced economic sanctions or financial restrictions, this is a key aspect of the system. BRICS Pay is designed to enable member nations to conduct transactions in their local currencies, avoiding the need to convert into US dollars. Currently, many international transactions, particularly between countries with different currencies, are processed through the US dollar, even when the US is not directly involved. This process, known as dollarization, requires converting local currencies into dollars before converting them back to the desired currency, leading to additional costs and exposure to dollar fluctuations. By bypassing the dollar, BRICS Pay is designed to reduce transaction costs and currency risks. This system allows BRICS nations to trade directly in their own currencies and potentially reduce the impact of external economic policies. Furthermore, the platform could eventually support digital currencies or stablecoins, offering greater flexibility for its members. BRICS Pay also features real-time currency conversion, enabling seamless cross-border transactions. This aspect of the system is designed to address both practical concerns, such as reducing costs and speeding up transactions, as well as promoting broader financial inclusion, especially in emerging markets. For BRICS Pay to be successful, however, it will need to integrate with existing payment systems like India's Unified Payments Interface, UPI, and Russia's Mir to gain widespread traction. The introduction of BRICS Pay comes at a time when many countries are seeking to reduce their reliance on the US dollar. Russia, in particular, has faced significant challenges due to sanctions, and BRICS Pay aligns with its efforts to develop financial systems less dependent on the West. Following sanctions, Russia accelerated its efforts to find alternatives to dollar-based trade. Other BRICS nations like China and India also see potential benefits in diversifying away from the dollar. China, for instance, has advocated for a reduced role for the dollar in global trade, especially amid trade tensions with the US. India, too, may view BRICS Pay as a way to support its growing role in global manufacturing and commerce. However, for BRICS Pay to succeed beyond the bloc, it will need to gain trust and compliance from international partners. Attracting businesses and consumers beyond BRICS, while maintaining regulatory and operational standards, will be essential for the platform's future. BRICS Pay has attracted interest from over 150 countries, many of which are intrigued by the possibility of trading without being influenced by sanctions or economic pressures tied to Western financial systems. Countries in regions such as Africa, the Middle East, and Latin America have shown interest in exploring alternatives to dollar-based transactions. However, the rollout of BRICS Pay is expected to face significant challenges. Achieving broad adoption will require overcoming technical, regulatory, and political obstacles. Some critics have raised concerns about the platform's ability to function effectively outside the BRICS bloc, ensuring that BRICS Pay can operate smoothly with existing financial systems and offer the necessary security and efficiency will be key to succeeding. While some nations see BRICS Pay as a potential safeguard against reliance on US-led financial systems, others remain uncertain about the long-term viability of the platform. Whether BRICS Pay can compete with the dollar and other established systems will depend on its ability to meet global standards and attract users. BRICS is already expanding. In addition to its 5 founding members, countries such as Egypt, Iran, and Saudi Arabia have been invited to join the bloc, to expand its influence in global economics and enhance the potential reach of BRICS Pay. Beyond payments, BRICS is exploring other initiatives, such as the creation of a BRICS grain trading exchange and a BRICS clear platform for settling securities trades. These projects are part of broader efforts to create a parallel economic ecosystem that reduces the reliance on Western financial institutions and promotes more direct trade among BRICS members. While BRICS Pay presents a new vision for financial systems, introducing such a platform comes with substantial technical and geopolitical challenges. One of the most pressing issues is ensuring that BRICS Pay integrates seamlessly with the existing financial systems in each member country. These nations have their own payment structures and regulatory frameworks, and aligning them for smooth operation may be difficult. Additionally, currency volatility across member nations presents a challenge for maintaining stable exchange rates. Real-time currency conversion is a key feature of BRICS Pay, but ensuring that this system functions accurately and cost-effectively across different markets requires significant technological infrastructure. Scalability is another concern. As BRICS includes some of the world's largest economies, such as China and India, the system must be able to handle large transaction volumes without delays. Furthermore, ensuring cybersecurity and protecting against technical failures will be essential for maintaining confidence in the system. Regulatory differences also pose challenges. Each BRICS country has unique rules for money transfers, anti-money laundering measures, and counter-terrorism financing. Harmonizing these regulations to allow BRICS Pay to function efficiently across borders will require close coordination between member nations. Finally, the system's adoption will depend on overcoming both internal and external challenges. Maintaining unity among BRICS members, while addressing concerns from external partners, will be crucial for BRICS Pay's long-term success. BRICS Pay represents more than just a payment system. It symbolizes efforts by BRICS nations to explore financial alternatives in a world where the US dollar has long held dominance. Whether BRICS Pay can reshape the global financial landscape remains uncertain, but it highlights a broader shift in international economics. As the world continues to change, BRICS seeks to be a key player in discussions about the future of global trade and finance. If you found this documentary insightful, please like, share, and subscribe to Intellica for more in-depth analyses of today's most pressing global issues.